like to wish you guys a happy International Women's Day. Yeah. Was that a groan I heard? Can I get all the women to raise their hands here in 4 years? Definitely some more women. Let's see, raise your hands. How about the women of color? All one and two of you? We've got a long way to go. We've got a long way to go. And I'll just say one last thing about this, which is it's not illegal for women to start businesses in the crypto space, but there are barriers. It's not illegal for a lot of companies to trade Bitcoin and to build crypto businesses in a lot of countries, but there are hidden barriers. And what I've been working towards and with and against the last 4 years is breaking down these barriers. And it's been great. And I'd like to thank Sonia for inviting me so many years. And the space has been, hugely growing in the last 4 or 5 years, since 2012 when we first started and 2013 when we started BitPesa. So awesome pace of growth and excited to be here. So let's start chatting and let's get over to my slides. Okay, cool. So BitPesa, I'm going to tell you a little bit about the evolution of my company, BitPesa, which, as I said before, was founded in 2013. And we were the first blockchain company in the world, Bitcoin company in the world, to make a market between an African currency and Bitcoin. We were the first in the world to make a market between mobile money and Bitcoin. And of course, which I love, the stat that I love the most, we're the first female-founded Bitcoin exchange in the world, and that's pretty cool. So we've got there's been some other African companies like Luna, which has just gone head and shoulders beyond us. There's been some cool growth around the world, and we've kind of been on a very different path. So let's talk a little bit about that. When I started this business, as Lorian said, I had begun my career at Credit Suisse on the prime brokerage desk. So I was in charge of secondary markets between all the biggest hedge funds in the world and all the biggest German-speaking high net worth family offices in Switzerland. And when someone needed stock for a short interest trade or somebody needed a stock loan, they'd come to us and they'd look for liquidity in a secondary market. Now, flash forward 12 years later, I'm building the same kind of secondary brokerage using a very different model in a very different geography. But it's the same essential fundamental idea, which is how do you provide liquidity for illiquid assets? And how do you provide liquidity for illiquid currencies? And I believe personally, and I think everybody in my company strongly believes, that if we provide the liquidity, we reduce friction in the markets. So while we started out with the very simple idea of sending money to Kenya, so how do we buy Kenyan shillings from anywhere in the world without using a SWIFT, without using a credit card, has now moved into how do we buy and sell African currencies? How do we buy and sell frontier currencies using any method that works, that's compliant and that works, that's fast, that's cheap, and doing it on a big scale. So we started in Kenya, and now we moved across to Nigeria, which is our biggest market, Uganda, Tanzania, DRC. We launched Ghana, Feb 1. We were also the first company in the world to get a license from the Financial Conduct Authority in the UK. So I've got a lot to share about our growth, not just in Africa, but over to Europe and now beyond. So here's a bit about our model. We call this the BitPesa hybrid model, and our marketing person hates that, but we'll change it soon. So here's the hybrid model so far. So in Africa, and I use the term Africa, although clearly there's over 50 countries and a lot of variety in the regions, and we'll break down some of those differences a little bit later. In Africa, where we operate, mainly in sub-Saharan Africa, we hold local bank accounts, local incorporations, local currency float, and we're integrated with all of the local infrastructure. Now, for any of you who've worked across the continent, you know the infrastructure in Africa looks slightly different than the infrastructure elsewhere. Of course, you have the world-famous mobile money, but you also have a lot of aggregators, sub-aggregators, banks, bank switches, regional switches, and BitPesa really works with what we've got on the ground. Now, we often get approached by like a UN agency which says, how do you change the problem in Somalia or South Sudan where there's no infrastructure? That's not what we do right now. We don't build last mile infrastructure. There are many people in this room, and I saw some great startups outside who are thinking about distributing wallets or doing that last mile infrastructure, but there's 99 problems on this continent, and we're only tackling a few, and that's not what we do. So we connect into existing last mile infrastructure. And then around the world, unless we were trying to recreate what Credit Suisse did or Western Union did, we are not going to go around the world and incorporate in 200 countries. But we would like to trade with low friction and low cost and speed and ease of use with counterparties around the world. So how do we do that? Well, we use Bitcoin. So if I want to make a trade in Japan, rather than open up a Nostro account with a Japanese bank, I can just send Bitcoin to Bitflyer alongside compliance. Our systems are completely interoperable, and in 5 minutes, I've settled with my counterparty. And I could do that from my couch in Senegal, as opposed from my super expensive desk in Zurich with Credit Suisse. So it's changing the idea of what does a secondary broker look like? What does a global respected brokerage look like? How can you build more liquidity? Well, that's inviting more brokers into the market, inviting more market makers into the market. You don't get liquidity with less entrants. And what I've been shouting from the rooftops about is that we need more entrants in these markets. But to be able to welcome new entrants, we need to lower the barrier. And not just the barrier to race or gender, but the barrier into what kind of infrastructure is needed. So where we're a market maker now between our own bank accounts, we don't have to use crypto if we don't need to. Sometimes we do. Sometimes the float that we have comes from our sales of crypto. But what's been exciting for us is building our own alternative infrastructure. And we work very carefully with banks. So we have African bank accounts, we have European bank accounts. Of course, we've got this alternative infrastructure, like I mentioned, whether that's mobile money or aggregators. And we can kind of settle for our customers between these. And this is the first time they've had options other than a very expensive bank, which doesn't operate in their corridor, or the black market. So for any of you who work in Nigeria, the informal market known as the Aboki market is very robust. So robust in that a secondary exchange rate is pretty much considered the normal exchange rate in Nigeria. So a lot of customers we work with have only ever operated with Aboki brokers. And this is the first time they can work with a broker that is fully compliant, pays their taxes, gives them all their stamped documents that they need, but also can operate with the speed, the ease, and the flexibility that an informal broker could offer. In a market where we don't necessarily have a bank account on either side, or we don't have control over the float of either side, this is the perfect place to use crypto. And there have been so many articles in the last 4 or 5 years just bashing the idea that Bitcoin is not good for remittance. And over, it's like, oh, it doesn't work, it's too expensive. Well, it does work in certain corridors if certain counterparties have the right tools at hand and for certain levels of transactions. So we work with a lot of large licensed money transfer companies and remittance companies. We work on a wholesale level, and we can easily accept bulk crypto from them and pay out into a market where we don't have our own bank account. So for example, we might have a customer in Nigeria that comes to us and pays us in local currency, and then we can use Bitcoin to settle for them in Japan if they're importing car parts. Simultaneously, we could have a licensed money transfer company operating out of Dubai send us Bitcoin, and we can pay out in local currency in Africa. So we can triangulate and use Bitcoin as the new middle currency. Now, this might not work in every corridor, and it's not necessarily needed in corridors where we have our own bank accounts, but this provides extended reach of our network. So this lowers the barrier to entry into new corridors. And often, it's the fastest, easiest way to do that. And more than that, there's all sorts of awesome new counterparties and brokers that don't look like you would think that a broker would look. So maybe it's a new startup, maybe it's an alternative financial institution. They have the compliance, they have the licensing, but they're not Credit Suisse, they're not JP Morgan, and yet they're the ones providing liquidity to make these trades feasible. And again, I'd like to reiterate, I mean, there's a lot of people who said we want to go against the banks, but right now at this stage in 2018, BitPesa is not competing, we're complementing what the banks in the region are offering. And I can't show this slide enough because I think there's a lot of people that say you have to be in one camp or another, but I'm a pragmatist and I'm building a business for my customers who need services. And for that, we are working with banks on customers they don't serve. And I'm not talking extremely bottom of the pyramid. That's what I did in my past life, working in microfinance, but I'm working with aggregators of them. So we can work with a farm insurance company who serves the bottom of the pyramid, but then they come to us, maybe they're doing a $25,000 trade twice a month. Now that customer is underserved by the banks. So, or maybe they're going in a corridor or a currency pair that the banks don't think is efficient or profitable, so they don't offer deep liquidity there. We can also work with banking clients that want to extend their reach into new areas. So we're kind of upselling to existing banking clients, offering them new markets, smaller trades, breakout of trades, and then also interbank efficiency. So a lot of the banks across the region don't speak to each other. If you talk to any of the Pan-African banks, they often have multiple management information systems that don't talk to each other. And we can kind of mix internal and external liquidity. So again, the hybrid model, maybe not the financial services institution that you would think, is the one that makes the most sense for the market. And I just want to put this slide up here because, of course, the SARB issued a recent little announcement. And when you read through the first 12 pages of it, you go, oh shit, oh shit, oh shit, oh shit, because it's listing all of the risks. And at the end, you're like, yeah, because they're like, but none of these risks really pose a major risk to the system. And I think a lot of people get caught up in listing all of the risks, and there's never a list of the risk mitigants, which are obvious and easy. And, I'm not a radical. I've worked with regulators across the continent for over 10 years. I was one of the first people who was working with the teams developing the deposit-taking microfinance regulation that really started the boon of microfinance and licensed microfinance institutions across the continent. And this is kind of the same thing happening again. So let's talk a little bit about what those risk mitigants are. So the SARB specifically mentions liquidity exposures. But why would you trade with any counterparty that doesn't manage their exposure, right? That's just bad business. That's like saying you would go to a grocery store that doesn't get fresh vegetables in. Just don't go to that grocery store. It's a core tenet of being a grocery store is to get fresh produce. And it's a core tenet of any financial services firm to manage their liquidity. And it's very easy to check up on this. You can audit them. You could look at their accounts. So I think strict exposure management, liquidity management, P&L, asset and liability management, these are just obvious things we've all learned. So why can't we apply those for businesses that also use crypto? Does it make it somehow that we have to totally reinvent the wheel? Not at all. And again, the SARB goes on and on about the nature of anonymous customers, but I don't know any crypto business, especially here in South Africa, where like sign up takes days, that doesn't automatically already use full KYC and AML. And all transactions have the use or source of funds to some extent. Smaller transactions, bottom of the pyramid transactions, less. Bigger transactions, over $10,000, $20,000, clearly more. The failure to hold sufficient VC units, again, you can use bank guarantees, you can use legal guarantees, you can do reporting. All of the largest exchanges around the world have shown this. And then again, the price volatility. And this is something that BitPesa has been very much at the forefront of all of our product development due to the work we've done with the bottom of the pyramid and in Africa, where we don't want to expose our customers to price volatility if they don't want it. If you have a customer that doesn't care or that wants it, awesome, go for it. Trade at your own risk. But when they don't want exposure, we can take that on easily by guaranteeing the price for the duration of the transaction. So I just want to put this out there for anybody who read that SARB report or anybody who reads these reports and goes, oh my God, there's so many risks. Well, there's been mitigants to these risks for as long as there's been financial services. And again, the compliance check at every stage for all of our fund flows, ourselves, our brokers, the banks at the end. This is a little bit about how our business has expanded, and I think this is important. A lot of companies that have developed, and I met a lot of founders over the last 5 years doing this work, focus a lot on Africa, and they get really bogged down in their own market. But if this is truly a global technology, and this is truly a cross-border technology, it's important to build your infrastructure across borders. And for a long time, we waited for other companies to build that. And we're like, yeah, when this company opens up in the UK, it's going to be awesome. We're going to trade with them. They're going to be a great counterparty. Guess what? That company went out of business. We're like, yeah, there's going to be a great counterparty happening in this country. Let's wait for that to happen and we'll launch this product. They went out of business. It's early days. There's still a lot of people figuring it out. So for us, we've had to hustle and build a lot of infrastructure. And, a lot of our shareholders were like, I don't know if you guys can do this, but for us, it was very important that we showed the world that this model works. And for that to happen, we had to do a lot of education and a lot of building of infrastructure that hopefully the granddaughters and grandsons of this sector won't have to build. And for that, we got licensed as an authorized payment institution in the UK in 2015. The only other license at the time was the e-money license that was given to blockchain. Circle came after with their own e-money issuing license. We were the first one. And that helps us really take money and trade with licensed remittance companies. We then recently announced an acquisition of the Spanish company Transfer Zero, and we received PSP licensing across the continent as well. And it was really rewarding to announce to the press, African company buys European company. Yeah, not a lot of Kenyan startups do that. Yes. all the bank accounts that we're constantly hustling for, and my comment in the beginning about it not being illegal to be a woman in this space, but yet you don't see a lot of women. It's not illegal to open a bank account, but yet this is a big problem still in the industry. Bank accounts closing. We have 52 employees, 5 are dedicated full-time to our bank accounts. And we work very closely with the Financial Conduct Authority in the UK. They love us, they call us, we give research to them. And they're like, why do you have problems getting bank accounts in the UK? Or why are you always complaining about this? And we said, I don't know, you tell us. So there's always this kind of like chicken and an egg where the banks say it's the regulator and the regulator goes, it's not me, buddy. And you're like, is it? Is it not? So there's still a lot of education that has to happen. And there's still a lot of progress that needs to happen before the barrier to entry gets lower. For us, it was really important to represent all the major regions of sub-Saharan Africa. So we had Nairobi, Lagos, and Dakar. And very soon we're opening up our SA office that we just incorporated last month. And again, we have our engineering team out of London. And then our top co has been in Luxembourg, where the regulator has been very positive. And some big companies like Bitflyer and Blockchain have all opened up there. And then in Nigeria, which has been really exciting, is that we've been working with the regulator for the last 2 years. And for those of you that have followed BitPesa, you know we had a major crazy fight with the regulator in Kenya, and we sued the largest company in Kenya, which, forget ICOs, that's a bad idea. And at the time, we were just too early, and the regulator didn't have the capacity to understand what the hell we were doing. But the difference that we made when we went to West Africa was really working with the regulator from the start. And that's been really exciting to see. Finally, we have 60 employees, split really importantly between engineers, finance, compliance. I think a lot of young startups that come into the space, especially in Africa, they may be very heavy into engineering or very, very heavily into working with the underbanked, working with the underserved. But really, it's that important key mix of compliance, finance, and engineering, because there's so much still to do on all sides, and nobody else is going to do it for you. And for us, it's really important that we have a team that reflects the products and the customers that we're serving. A little bit more about customers, about the ecosystem. So, we get a lot of credit for doing this here. And I think that we're very different than the other purely Bitcoin exchanges that are on the continent who are killing it. And we love them and we trade with them. But these are the other companies around the world who have had similar models. So CoinsPH, for example, focuses almost exclusively on the retail remittance space. While for us, we're working more at the wholesale level. And we work with corporates. We work with payment companies, with some of the largest Fortune 50 companies in the world. The CoinsPH is really on the retail side of that. Bitso is more like us in Mexico with a mix between retail and wholesale. We have Uno Coin with the demonetization in India, had a huge thing for domestic payments. And publicly, they do not do cross-border payments, but it's still a great use case. And then, of course, Ripio, Sebastian's company out of Argentina, who started out with retail and then cross-border, and with their highly successful, I think they were over 30 million ICO, went more into credit. So it's been kind of cool to see how the early companies in the space kind of evolve from just exchanges into offering more products. And just one last thing, since I'm here, to talk about the blockchain regulation, and I use the word blockchain because that's what the regulators use, across the continent and what we've seen so far. There have been a few other countries that have made little issued comments, but this is really what I think for my company and for companies that are working in the foreign exchange space to really think aware of. So you always get that very scary consumer awareness notification that's like buyer beware. Sometimes they're really funny, like the one in Uganda, which specifically went on and on about Dogecoin. I'm not joking. And other times they're very specific. But that consumer awareness notification comes out, and then the press goes, it's illegal. So I think we need to really judge between legality and consumer warning, because there are consumer warnings about many financial products. Next up, it's the PSP, so the Payment Services Provider license. Now, these are the ones that have just kind of gone across the continent fully. Tanzania finalized theirs last year. Ghana is finalizing it right now. Hopefully Q2 will be the first time they've offered it. Nigeria and Kenya, of course, had the PSP license for a few more years. So in the UK and in America and in many places in Europe, a PSP license is required for any Bitcoin exchange. Anytime you move between crypto, digital, whatever you want to call it, and fiat, you are required to have that payment license. That's not so in Asia. And so far, it hasn't been the case in Africa, except for Tanzania, where they want everybody to get this new license that they've just launched. So that's been interesting to see the difference there. Banks, are they allowed to work with these kinds of companies? So again, with the consumer awareness notification, you've had some like SA, Uganda, Ghana, who haven't really mentioned it too much, so it's at their own risk. Nigeria specifically has a clause in their circular that says, and for the banks that want to work with these companies, make sure you do additional compliance. So they're even more specific. Same thing for TZ. And then we have my old home, Kenya, which just did a complete ban. But they're the only country on the continent and the only country on many continents that have gone that far to do that. And then finally, banks directly holding digital currencies. This is up for debate, but my interpretation of a lot of the warnings that have gone out is that it's not regulated. The central bank is not regulating it. Therefore, regulated institutions can themselves not hold it. So as opposed to other banks, maybe in Japan or even in Germany or Switzerland, who are holding crypto for their customers, so far we haven't really seen any central bank on the continent go out there and see that that's possible. That's just a brief, I'm summarizing for the sake of speed, but there's a lot more in depth. But 4 years ago, 5 years ago, we had none of this. We just had a lot of rumors. So I'm super excited that this all came out, and we're having like multiple circulars come out. And when customers or partners ask me, what does the regulation look like? I have a whole Dropbox to send them, as opposed to just like, well, I think, so we're getting there, but we have a long way to go. So thanks for listening, and we're always happy to chat with you about our experience in the last few years and what we've been building and kind of living between continents and all over this continent. And I'm here to chat. I thought I'd delink the hyperlink, but it's elizabeth@bitpesa.co, and happy to answer any questions.
Sorry, Rob from Mukuru. I believe that we're binding with you. I think I brought it by Trish whiskey or something this afternoon. I've got a question for you. I understand that the MTO that binds with you from London stocks 100 grand in the dollar account there. I understand all of the send side, but on the receive side, just explain how the transaction flows through into Sally receiving Naira in Lagos. How does that happen, the last piece, and just the KYC elements there?
Sure.
Thanks.
So let's use a case where, here. So in this situation, let's say it's a Dubai-based MTO, and we don't have a dirham account, and they're one of the 3 MTOs in Dubai that doesn't use dollar, they use dirham, right? So they give us Bitcoin through however means possible, or we get the Bitcoin there. But it depends. If it was in the UK, we do because we have a sterling account. In places where we don't, we start with Bitcoin. So where we do have an account and it makes sense and the account's cheap, we'll use it. If the account's whack, we don't use it. Whatever works. But using Bitcoin has allowed us to extend our reach to places where we didn't have an account, or the account was expensive or slow, or a lot of banks don't have APIs yet. You have to manually check your balance. It's easier for me to take Bitcoin. So it depends. So let's just say we get credit abroad. Now, how the heck do we get local currency? This is the difference. This is the beauty of the business, right? This is the one thing we do that so many other companies don't do. We look for liquidity locally. That's what I mean by being a market maker. I have customers, marketing companies, travel companies, airlines, importers, exporters, pharmaceutical companies, shampoo and soap companies who want to sell me their Nigerian Naira. And then I will settle for them to Japan using the funds that came in from the company out of Dubai. This is a compensation model. That's what they call it in French West Africa, compensation. This is also a netting model, a pooling model. Yeah, every customer that transacts with us, as this one goes to, has full KYC at every point. So we own the customers on every side. And the Nigerian Naira is coming directly into my own Nigerian bank account. So it is going from my customer's Nigerian bank account to my Nigerian bank account. Now, I have Nigerian residency. I have no JV in any of the countries where I operate. It's 100% owned by us. That means I have full control, no third parties involved. And I work with licensed banks who know exactly what we're doing and annoyingly do a compliance check every month. So, yeah. I am the market maker. Okay. You're looking at her.
Hi, good afternoon. Ian Bestarabia from Thomson Reuters. Just not the media side, just from the financial side. Just a quick question to pick up on the last discussion. So the reporting to the central bank and that, is that done by then the local banks? So do they do that begrudgingly on your behalf?
Yeah, because they ask us, what the heck was this transaction for? And we say, here's an invoice for Japan. But now the invoice is no longer in US dollars. The invoice is in local currency. That's where my political advocacy comes in. Why are we paying invoices in dollars if we live in Africa and the flows are going to Asia? You know, give me a break. This is like when Kenya's a huge rose exporter. When roses going to like Douala in Cameroon were clearing through Amsterdam when there's a direct flight from Nairobi to Cameroon every day. Why? You know, why don't you just put the invoice in local currency? The reason you didn't do it before, nobody wanted to buy it. There was no market maker beforehand. Here I am. Or there were market makers, but they were little hustlers all over the place, literally on the street with a duffel bag at their feet. Some of them are more professional now, but they don't do compliance. They don't have liquidity deeper than 50,000 bucks, and it's a pain in the butt because you have to touch cash, which is expensive and heavy. So, yeah.
Just an additional question. So what's the opportunity for regional opportunities? So cross-border between...
Pan-African trade is my favorite. I give huge points on extra Bitcoin to any sales team member who brings me a Pan-African customer. Margins are great. They're like sending us presents for the margins I think that are so high. Like, you know, they're so excited. This is exactly what I mean when I'm talking about underserved customers. There are so many SMEs that are working with Pan-African banks that can't manage Pan-African trade. You know, like, give me a break. Nigeria to Ghana, you can't do. You have a bank in both places, two different systems. So I think this is a lot of room to grow here. And any bank that says, we have a Pan-African product, we don't need you, I say, really? Let's do a demo. And then, you know, let me show you what it looks like. So I think we have this is a huge continent. These markets are booming in so many ways. There's so much infrastructure yet to be built. So it's up to the small companies to start building that as well. And maybe just another question from somebody else.
First, I would like to say I'm very impressed by your platform. And then second, I would like to know, how do you manage the volatility of the Bitcoin? I mean, you talk about compensation, but how it works, I mean, effectively?
It's my core business.
Ah, it's your core business. Yeah.
So I'm all about foreign exchange management.
Because
I have 15 market makers and traders on my desk that make sure the positions we take don't leave us exposed to anything we're not able to handle. So, and then, you know, we trade in and out of currencies. We have our safe haven currencies. We have our customers that we know are coming in every single day with contractually guaranteed flows. So just like any other FX desk or any other treasury desk on the planet, we manage our exposure. And by the way, the Nigerian Naira was more volatile than Bitcoin in 2015. Yeah.
Hi, I've got two questions. One, in terms of how a regulator would classify something like Bitcoin, would you prefer it to be classified as a currency or a commodity? And two, the second part of the question is in terms of the UK and the FCA, I think in 2017 there was a report that said from the sandbox that the banks were being anti-competitive. Like, have you experienced that in your business?
Second question, yes. For all the reasons that I mentioned. The fear of the unknown, you know, the lion has a little mouse running around and it's like, you know, rather, what can I learn from this mouse? Let's just kill it, it's annoying. Or like education. And it's hard to move these giant, sorry for all the analogies, like these giant cruise ships, even if they're like, yes, we want to do this. It's like, it just doesn't fit through the door that needs, you know, the size of the door needs to be small. So it's just hard, and just swimming through any of these kind of things. I worked with the UN a lot in my past life, so I understand big institutions that just can't do what they want to do because of size, so for sure. And back to the currency or commodity, I don't want to get nerdy on you guys, but, you know, my thoughts, like monetary policy unity can't happen until you have cultural and political and social unity. So we haven't seen the CEFA work across West Africa. We still don't have a single currency in East Africa. I truly believe we need sovereign currencies everywhere, and I'm a huge supporter of local sovereign currencies, and I know that puts me at odds with some of the purists in the room, but I believe that it's important to promote local currencies. So do I believe that Bitcoin should be considered a currency? Not in the same way that it would compete with a sovereign currency. There's very different things about it, and it scares the shit out of any regulator when you say Bitcoin's its own sovereign currency, you know? So I think let's differentiate currency. It's a big category. So I do believe we need to have lots of African currencies, and I do think that Bitcoin and other digital currencies can work as what I like to call a complementary currency. How do we go between all these African currencies and all these Asian currencies? Even if everything is an e-ZAR or an e-SEFA or an e-shilling, and you have an e-RMB, right, or an e-yen, how do they still interact? You're still going to need liquidity providers. You're going to still need a buyer and seller. So sometimes going through a complementary currency is necessary, and that's what I think this is a beautiful example of. And then we're going to need to go through, you know, corporate currencies like Amazon points, you know, and I always say that there are more outstanding Amazon points than the GDP of many economies, or, you know, 10 points and things like that. So I really see the future of digital currencies, and by that, like Bitcoin and other digital currencies, really acting at that complementary model.
Elizabeth, thank you very much for sharing your experience and insight. Is very helpful. Thank you.